just getting started here. Okay, just give it a second, let everything load up and get ready to go. Okay. All right, we're good. We are now live. Good morning, everybody. Good evening. Good afternoon. How's everyone doing? Okay, just turned on the chat for you guys. We are live on YouTube along with our website on urbanforex.com. So you guys will be able to see them on both places. Okay. All right. Morning, Tony, Chad, Sinan, Forex Dude, Ike, Raj, Keg. Welcome. Okay, so it looks like it's getting filled up now. People are starting to come in. All right, we'll give it another minute and we will get started. Vijay Thapa, you're saying your face is looking black, Navin. Why? I'm sorry. It's I have no control over the color of skin. So no, I'm sitting in a dark room. Otherwise, it gets too bright. But welcome, guys. Welcome. All right. Today is a very important topic. We're gonna be going over support and resistance. So before we begin, as always, we want to get started. How many of you guys here are here for the very first time? You guys are here brand new. You guys do not know Urban Forex. You guys do not know me. Okay, completely new. Okay. All right. I think the audio you guys are saying a little bit louder. Let me see if I can turn it up a little bit more. Let me see. Okay. I believe the audio should be a lot more louder now. Yeah, is that better? Sorry, might be too loud. Okay, that should cover the audio issues. All right. Okay, so some of you guys are new. All right, and finally, how many of you guys have been to these webinars before or know of Urban Forex or Navin Prithyani, me, and you guys are here? Okay, Saman, I see you're brand new. Okay, the audio is good now. Fantastic. I'm glad to hear that. Okay. So, for those of you guys who do not know me, my name is Navin Prithyani. I am the senior trader at forexwatchers.com. I am your mentor at urbanforex.com and CEO of Black Tower Investments in Hong Kong and CEO of Anticipate, Don't Participate, DMCC in Dubai. So I have now relocated. I am no longer in Thailand. I am now living in Dubai. I've already caught up with a lot of you guys. It's great to catch up with more of you guys as you guys are coming through the city or if you guys already live here. So it's always nice to catch up. All right, guys. So a couple of things. Okay, today we're going to be talking about support and resistance, right? Support and resistance is a very, very big topic. And for the most part, it's been used in all different kinds of twists and turns and angles. Okay, so what we're gonna do today is we're gonna start from the top and take you all the way down until strategy. Okay, so basically what I'm trying to say is I'm gonna take you from what is support and resistance, as basic as that, and you'll be surprised how many people do not know this, and then take you all the way leading up till the strategy part on how can you use support and resistance to the best of your ability. This is going to be your complete guide, and within a couple of weeks I'm also going to email you out a guide that you can watch step by step with bite-sized videos so you can train and learn along as well. Yeah? All good? Everyone with me so far? Shall we begin? Okay. Faithful Joe saying hi Navin, I'm new here. Welcome. Some of you guys are saying you guys are MPA students. Great. Welcome on board. All right, so let's get started. Okay. So, first things first. What is support and resistance in your eyes? Okay, let me open up a whiteboard as well. Okay, let me open up a whiteboard so I can draw for you guys, and you guys will be able to see that. And I'm gonna move my screen a little bit lower. Okay, here I am. I'm gonna put myself on the bottom left hand side so I don't take up your real estate on your screen. Okay, all right. Okay, I'm just gonna draw a circle on my screen. Let me know if you guys can see it. Once that shows up, we shall begin. Okay, I see a lot of you guys have been to a lot of my webinars before. Okay, now when it comes to support and resistance, the basic questions that you need to be asking is not what is support and resistance, how can I use it? Okay, this is what everybody asks in the Forex industry. You have to stop this nonsense. I came into this industry, how? How can I make money? How can I do this? How? You need to stop the how and get into the why. Why do I need to do this? Why do I need to learn this? Why is this important to me? When you quit the how and you go into the why, you will explore a lot better on what you need to do and how you need to do it. Okay? Otherwise, it is just a game and you're waking up and going to bed. Waking up and going to bed. You're basically in this routine that's never going to end. It's never going to end. All right? So, you guys see the circle now. Now, support and resistance. A couple things. So, I'm going to draw a dude. Okay? All right. That's the dude right there. Okay, you know what? I'll draw a dudess also. Okay, give her a nice little skirt. So there's a man and a woman here. She's got nice hair, and he's got weird spiky hair. All right, there we go. Now, anything above the current location of someone is called resistance. What is above you is called resistance. Okay? Okay, I'll just put RES as resistance. What is below you is called support. Okay, I'll just put SUP. Okay, for the sake of time and my spelling mistakes. Okay, so resistance is above you, support is below you. Okay, anything below you is support. Imagine you carrying a baby or carrying something, you are supporting it. That will help you remember it. That's always below you. And resistance is like, yeah, fight the power, you know? So resistance, okay? Now, let's now get rid of all of this. And now let's understand why do we have support and resistance in the market? And what is this thing? Okay, so let's say the markets are moving. Okay, we're going to go into the very basics. I need you to understand what is support and resistance so you can become an expert at support and resistance by the end of this webinar. Okay, so I'm going to take you through a journey from the beginning of this webinar as if you are a complete newbie and you never heard of support and resistance in your whole life until the end, where you're going to be better than the average individual who's read support and resistance from a book in the library. Okay, so let's take you from the beginning all the way till the end. All right, now why does support and resistance happens in the market? So in the market there is a price rhythm. Okay, there's a price moving. Okay, there's always a price moving. That price is determined by people buying and selling. Okay, so let's say there is something you want to buy. Okay, let's say it's a phone. I just use a phone as an example because it's the easiest thing everyone can remember. And I'm sorry, this is an ancient phone. It has buttons. For some of you new kids, you're probably like, what is those circle things on that phone? I'm sorry, it's a half a touchscreen, okay? It's a half a touchscreen, just go with it. Okay, so it's a phone that people want to sell. Some people are saying, hey, I'll pay you $10 for it. And some people are saying, hey, I'll sell it to you for $10. People are happy. That is a transaction happening in the market. Okay? Some people saying, I'll pay you. Some people saying, I'll sell it to you. That is the difference between buying and selling in the market. Okay? Again, we're taking from the very basics as if you did not know squat about support and resistance, okay? All right, now as the transactions are happening, sooner or later, the guy says, you know what? I don't want to buy it at $10 anymore. And the seller says, I don't want to sell it to you at $10 anymore. I'm going to sell it to you only if you're willing to give me $15. Okay? And the guy is like, no, I don't want to give you $15. I'm going to only offer you 10. So they're in a fight right now. And then sooner or later, one of them has to give in. Okay? And the guy says, fine, I'll give you $12. Can you give it to me at least for $12? And the guy is like, no, dude, 15 only. Then he goes, fine, I'll give you $14. Come on, man, work with me here. Give it to me. I want it for $14. Okay? And the guy is like, no, I'm giving it to you for only $15. Then what happens is that buyer says, you know what? Screw this. I don't want to be treated like this. I'm walking away. And that buyer says, you know what? I'm not going to offer you a single penny. And he just walks away. He leaves the store, he leaves the whole location, and he says, I'm never coming back. Now, there's no buyers. And the price is at $15. No one willing to buy it. The store owner who was selling this funky little iPhone with no antenna and buttons on it, he has to sell the iPhone. So what he does to attract customers is he's going to say, fine, I'll sell it for $10. No one? I'll sell it for $12. I'll sell it for $9. Really? Nobody's buying it? Okay, I'll sell it for $2. Come on, somebody buy it. I'll sell it for $1. Jesus Christ, someone just take it. Okay, do you see what happened here? Just walk me through. I want all of you guys to try to participate in the chat and just try to explain what just happened. And think about it in terms of your daily life. Don't think in terms of what this means in Forex. I want you to think what this means for you when you go out shopping. What just happened? There was not enough demand, so the store owner, because he has a lot of supply, he has too many pieces, he needs to sell it at a lower price. Okay? He needs to sell it at a lower price. What happens is people who are walking by that store every day are looking at this. They're like, somebody was buying it for $10. Then they were willing to take it up to $14. And then I've been seeing signs. I've been walking down the street, down New York, walking down Saks Fifth Avenue, and there's this nice shiny store, and they're selling this funky iPhone. Okay? I've been seeing it every single day on the store. $15 for sale, $15 for sale, $15 for sale. And then the next day I walk by, $10 for sale, $10 for sale, $9 for sale, $9, $2 for sale, $2, $1 for sale. Whoa. I remember all this. Wouldn't you remember it? I just remember seeing $15 a week ago, and it's come down all the way to $1. Now. Here's where it gets interesting. Gets interesting. Okay? I'm going to move this to the side. Okay? So that dude who's been walking down the street on Saks Fifth Avenue in New York, who keeps seeing it on the window, he's like, very interesting. It was $15, now it's $1. Now, let's name this guy Bob. Bob has a friend. Okay, Bob has a friend, Billy. Okay? Billy says, hey man, do you know where I can buy a cell phone that looks really weird, it has buttons on it and no antenna? And Bob's like, yeah dude, go down to Saks Fifth Avenue and there is a phone right there. And he says, thanks, that's what I'm gonna do. He walks down Saks Fifth Avenue and he sees prices are at $8. He sees prices at $8. Okay? He's still considering. He's like, I don't know if I want to buy today. He comes back tomorrow. he sees prices are at $10. Okay? He comes back the next day, he sees prices are at $13. Now he's getting very, very anxious. He's like, I need to buy this before it keeps going higher. I have to buy this. Everyone seems to be raising the price higher because there seems to be a lot of demand. I have to buy this quickly. So he calls up his friend Bob on the phone and he says, listen, Bob, the price is at $13. It's nowhere near the $2 that you told me or $1 that you told me. It's at $13. It keeps going higher and higher every time. So what I'm going to do is I'm just going to buy it. And Bob says, no, wait. I remember from my memory when prices went to $15, they collapsed down to $1. I remember it very, very well. Very, very well. He says, really? Okay, in that case, I will not buy it. I will wait for that crash again. I will wait for that crash again. So the buying stops. Because of the anticipation of he crashed last time, he can crash again. Now, let's take this story. Okay? Let's take this story onto the charts. This is a simple story of how people do buying and selling in a normal store. Don't treat Forex any differently. Okay? Let's now take you into a Forex environment where it's nice and charty. Okay? Nice and charty. Okay, let me get rid of all of this. How do you select all? Okay. Boom. Clear page. All right. There we go. So far, so good. You guys all with me? All right. So on a chart, prices are starting from here. Okay. Let's say the price is at 100. Prices start to rise. They're competing. They're rising. Prices reach $150. At the price of $150, suddenly prices drop down 90, 80, 60, 20. What this does is the stronger the collapse, okay, let me repeat that word. The stronger the collapse, the stronger the memory of this price. The stronger the memory of that price is ingrained into people's minds. Okay? Which means next time prices come slopping around to that area, Bob is like, wait, stop buying it. Remember last time when prices got near this area, it collapsed? So that's why you don't get prices always exactly to that area. You get them thereabouts. This is why your support and resistance is never going to be precise to the pip. It is going to be thereabouts. Okay? Because the people are like, no, stop the buying. Don't buy it anymore. Remember that price. When it gets there, it just crashes. So let's wait for that discount again. Once the discount comes, we'll buy it at that time. It's going to be a lot cheaper. Okay? Same thing happens on the flip side. When the discounts are coming in, the people are like, come on, come lower, come lower, come lower. And then they're waiting for this price. What happens to that price? It turns earlier from that price of $10, let's say, and it starts rising from there. It goes from $20 to $30 to $40 to $50. And the guy here is like, oh my goodness, I can't believe I missed it. I have no choice but to buy it at 40 now. In the future, when the market comes down again, the same thing will happen from this price range thereabouts. They're going to try to buy it again. So now I'm going to ask all of you guys this one question. Okay, I'm going to ask all of you guys this one question. How does this matter to me? Okay? And a more important question to think about is, if prices are shocked from this area, and then they crash, and they're like, don't buy it once you're getting close to there. And then when it goes up, they're like, okay, don't buy it once it gets close to there, and don't sell it once it gets close to here. Isn't price always going to be in this ping pong market? Don't you guys agree? It's always going to be stuck sideways then, technically. Because people are constantly bouncing from their memories left and right. Like, oh, don't do that, don't do this, don't do that, don't do this. So how do you get a market? How do you have a market that's, when you open up your Forex charts, everything looks like it's running away one direction, or they're running away the other direction, and some days it's not doing anything? Okay, how is that possible? Here's what you need to always understand. One thing always matters in the market is panic. Okay? It is true today, in today's world, the only thing that grabs people's attention, including goldfishes, is panic. The news uses it, articles use it these days, the top 10 ways to get rid of your cold sores, herpes, whatever you want to call it, right? They're always trying to scare you with all kinds of stuff, right? The market works in the same way. We are pre-programmed to fear. Okay? We are pre-programmed to fear. Okay? So, having that said, I'm going to ask you guys this thing. When the market does this, how many of you guys are in the market like, oh my God, today I'm going to make millions? Okay? I'm gonna make so much money. Look at that beautiful design. I am gonna be a billionaire. Nobody does anything. They're quiet. They're just sitting on, leaning back, and they're like, what should I wear tomorrow? Popcorn? What movie should I watch? Until this happens, and then the market starts running away. Once the market starts running away, everyone's like, ding, 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 ding. I need to do something. I have to do something. If I don't do anything, I will not get a red Ferrari for my dog. Right? I will not get a red Ferrari for my dog. So I have to now join the market and take action. Doing that process, this becomes a memorable moment. This becomes a memorable moment. Okay? A memorable moment. So you want to understand that. How people think is how you're going to get an edge. Okay? Same thing. If the prices are, I want to ask you guys this thing. If the prices are going up like this, I want to ask you guys a question. Is this memory that this price is so dangerous and it will push price up? Or is the memory still hot about, look at that big down move. Oh my goodness, I need to sell this. Which side are you on? Which side is the mentality more attracted to? The big panic, like, oh my goodness, Home Alone face? Or is it going to be on the slow and draggy movement up? Which catches your eye? The big one, right? The big one. The memory is still hot. Very good. The memory is still hot with this one up here. So, support and resistance works the exact same way. The power of each support and resistance rely on how strong the panic. Okay? So if you have a movement and then it goes down, you can say that is a good resistance. But once prices are just hovering around and then they go up slowly, that is not a good support. Unfortunately, in today's markets, what is being taught is the longer, as many times as a price is being touched and touched and touched and touched, the better your support. Then there's the other train of thought. The more times it touches, the support is weakened. Leave all those thoughts behind. I want you to clearly understand what would you do when you're in that store looking at that nasty phone and thinking about how do you personally react to buying and selling. It is the exact same thing in the markets. Do not change how the brain works. The brain works the same way outside of Forex and inside of Forex too. Okay? Everyone with me so far? Eddie, you're saying so size of candles matter? It's the panic movement. It's not the size, because this can be big size candles also, but then it's the size and how it runs away. It's maybe the quickness, the speed of it can make a difference. Okay? Because if it's slow, it won't grab your attention. The news is not going to talk about it. But if it suddenly goes like this for one day and then the next hour it drops like crazy, everyone's going to talk about it. Every forum, every news channel, everything is going to talk about it. Bob, Billy, Uncle Tina. Okay, that's a weird name for an uncle, but Uncle Tina might talk about it as well. So they're all going to discuss it. Okay? That is in the minds of people. Having that said, let's take it a step further. So now you understand resistance is above you, support is below you, right? So far so good. Now, there's a concept that is called support becomes resistance. How many of you guys have heard that before? Or resistance becomes support. Okay? Okay, yeah, so all of you guys have heard that in one point or the other. And those of you guys who are new, you guys are going to encounter that soon. I'm going to help you understand it right now. Okay? So let me get rid of all of this thing. Let me, boom, and clear. Here we go. All right. So there's this concept of support equals resistance. Okay? Or support becomes resistance. Okay? Once the price crashes down, boom, we say that is your resistance area. Okay, that was your resistance area up there. Okay. All right. And some people are saying this is our support area. Okay, if this is our support area, then this can in the future become resistance, basically. Okay, so the top part is support. Resistance. Blah, 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 blah. Top part is resistance. Bottom part is support. Now that we've crashed through it very aggressively, like bam, we've gone through it very aggressively, this support can now become resistance. Because by the time prices come up here, it is not because there's a line in the sky that you need to be afraid of it. It is because Bob and Billy are saying, hey, remember last time prices got around this area, they crashed. Remember. It is that memory that makes support become resistance. So, a quiz question for all of you guys, every single one of you guys. Can you ever use support and resistance to the pip? To exactly that one pip, saying it has to come exactly here before it turns? The answer is no. You cannot. Support and resistance will always be an idea when the public will back off and saying, I don't want to buy it anymore. So you cannot time it to the pip like that. Does that make sense? So whenever you see a support and resistance strategy that's telling you, you know what? Just draw a line like a sniper. And the moment it touches that line, you sell your house, you sell your dog, you sell your grandma, you sell your grandpa, you sell everything. Don't do that. Yeah, don't do that. Because now you know better. Now you know better. It is not a strategy. It is simple logic you need to understand of why it happens. We can work on the how in a bit. Why first? Everyone with me so far? Understanding it? Okay. Man, the light is so bright behind me. I feel like Jesus is coming through my windows or something. Like God is stepping down. Okay, so let me get rid of all these lights here. Not lights. Let me get rid of all these drawings, and we'll go a little bit further. Okay. All right. Here we go. Okay. Now, quick question: true or false? Here's a dude. Okay, that's true. It is a dude. Okay, but the question is this support true or false? Is that support? Five seconds. 5, 4, 3, 2, 1, 0. And the answers that are coming in lagging, false. Very good. Very good. Very good. That is not support. Anything above you is called resistance. Anything below you is called support. Now that you guys have a fair understanding of support and resistance, I'm just going to flip the scenario one time to give you in an uptrending market, okay? And hovering around. They're doing this now. I'm going to change it up a little bit. They're doing this. And then it goes bam. Okay. Would you say we have broken support, broken resistance? Would you say we have broken la resistance? Okay, false, can't tell. Okay, some people are saying not yet. This is where many people get stuck and trapped in, okay? When the market moves, if it's not panicky enough, you need to understand maybe this resistance has not been broken and most likely will not become support afterwards. Okay? It will not become support afterwards because people's trains of thoughts have not been triggered hard enough. Okay? People's trains of thought have not been triggered hard enough. And then later, it does this. Okay. How about now? Okay, now, here's the question I want to ask you guys, because now all of you guys are going to say yes, and which is correct. However, now here's the main question I want to ask you guys. Let's go into the how a little bit. Let's go into the how. How do I draw my resistance line? How do I draw my resistance line? Do I keep it the way where it was already was? Do I draw it up here? Do I draw it from the area where the massive movement began? How do I draw it? Everyone looking for the how answer can stay lost. Everyone who knows the why understands as prices come lower in this area, we need to be prepared to get ready to trade. Because sooner or later, the sellers the buyers are going to jump back in. They're going to jump back in. Okay? So they're thinking, get ready, prepare. Get ready, prepare. While the how people are thinking, I think I have to buy it exactly here. No, I think I have to buy it exactly here. If I don't know the how, I can never trade. Actually, I must know the how. Let me Google it and let me find 30 or 40 different mentors on support and resistance. One of them must have the golden key. Have you found the golden key yet? Have you found the golden key yet? I haven't. You gotta understand the why. If you understand the why, you become a little bit better. So, I'm going to share with you guys a little bit something. Okay? You guys ready for this? I'm going to share a little bit something. Okay? I'm going to go here. I'm going to open up my recent trade I did on pound New Zealand. Okay? Okay, my recent trade I did netted me a total profit of $20,000. Okay, so support and resistance. Now, resistance is above you and support is below you. You always want to stay on top of that, right? Okay, so shall we do some more examples on support and resistance? Get rid of that. How many of you guys here are like, wait, what just happened? Why would you show me something that's 20 grand worth and then go back to support and resistance? Shock value? Do you guys agree? Is there a panic in the brain that's like, whoa, whoa, whoa? That's how the memory gets triggered. That's how the memory gets triggered. It's like, oh my goodness, what happened to that? Can we talk about that first? Right? This is exactly what I want to teach you about support and resistance. Is support and resistance only grabs attention if it's shocking enough that is not normal. That is not normal. Do you guys agree? Sorry, it was a weird example, but it was the only thing that came to my mind to shock you right on the spot. All right. Okay, so now let's take a look at this. Okay, let's take a look at this. All right. Saman, show your trade too. You want to show your trade, Saman? All right. So now let's take a look at this. We have the markets ranging. Okay, markets were ranging. They're going up a little bit. They're going down a little bit. Whenever you have up a little bit like that, many people will draw this as support and resistance being broken. Do not fall into that trap. That will have less value for you. Because what is the reason for you to learn support and resistance? Is to do something about it. No point in learning support and resistance when you cannot do anything about it. So these types of support and resistance, you cannot do anything about it. So no point of drawing those or learning those. So what are you actually looking for? You're looking for a movement that is not normal. Okay, so if this is the normal movement up, normal movement down, normal movement up again, and then bam, that's not normal. Okay, that's how you want to say, okay, hereabouts is, that used to be my resistance, has now become my support. When prices were around this area, all the buyers went to that cell phone store saying, hey, you know what? I'll give you 10. The next guy said, I'll give you $11. Give it to me. I'll give you $12. Give it to me. So the next time that store gives a discount and the prices start going down, you bet the public is going to remember, hey, it's not going to go below $10. You know what? Start piling up. Get ready to buy it. Some people will start buying it right now. Some people will start buying it here. Some people will start buying it there. All of this activity will begin the buying process. The buying. Let me buy it. Let me buy it. Let me buy it. Because I don't know if prices are going to get down to that same discounted price again. Does that make sense? So now you understand what is support and resistance. You understand how support and support can become resistance and how resistance can become support. You understand that as well. And now you're also understanding how to actually draw them with the idea of why do they happen anyways, because then the how, the exact how, disappears. And that long quest of I need that perfect support and resistance strategy, disappears. It disappears. You are now free. You don't have to sit there every night Googling for, I need that someone to tell me exactly how to draw my support and resistance. It's gone. Okay, you can now relax. Now you know why it happens. You will know that there is no such thing as the exact line. Okay? All right, so now, let's take it a step further. Shall we go into a little bit of strategy? What can you do to make the most of this? Okay, I'm going to open up that trade again, and I'm going to show you, okay? Tahir is saying how $20,000 is related to support and resistance. Okay, all right, now here we go. Let me go into back into that chart, okay, where I closed that trade. This is pound New Zealand, and I'm going to open up that position for you, and I'm going to show you. Okay, here we go. Pound New Zealand. Okay, this is the trade I was doing yesterday, and let me move it up here, and that's the buy I took. Okay, and I got out up here. All right, now a couple things are coming to your mind. Why did you do that buy? Okay, and why did you exit there? What was the reasoning behind it? So on and so forth. Now, to do this buy, do you see any panicky movement out of this thing? Is there anything that looks out of ordinary except when it actually moves? But when it actually moved, I already got in on it. Okay, there was another trade afterwards where thereabouts when the prices came down, people got in again, and then it shot up again. Okay, this is a shocking area, right? So thereabouts, people started getting in again. Okay, you can see this momentum of people are starting to get ready for the buys, and they bought it again. But I got in a little bit earlier. What I personally use is correlation. Okay, below this video, if you're on urbanforex.com, you'll see the app that I use for FX Meter. Let me see if I can have the icon here. Open FX Meter. Okay, this is the app that I use. Let me restore it. This is the app that I use. It is now available on Android as well. It is also available on iOS. So if you don't have it, you can refresh your page. It is just below this video. You can click on it. If you're on YouTube, you can email us, or you can head on over to urbanforex.com to find out more about it. Anyways, I use correlation to understand what can I do to get in. So I'm going to open up the pound group. So what I'm doing here is I'm opening up everything related to the pound. Okay, pound USD, pound CAD, pound Swiss, pound Aussie, pound New Zealand. Pound New Zealand is the one I traded. Okay, and then Euro pound. Notice that I grayed that one out because pound is on the right hand side. It's flipped upside down. Okay. All right, now, yeah, I know. So that is the major announcement today is FX Meter is now available on Android. Please, if you do use it, give us a nice 5-star ratings. We've worked very hard to finally release it. It's been a year since we've released it. It is available now on your Google Play Store. Go get it. Okay. Wait, no, don't get it now. Watch the webinar first. Okay. All right, here we go. So pound USD at that time. Let me open up the 15 minutes. Okay, here we are. So that movement yesterday, we had this movement on pound New Zealand. Very similar area. I got in on the buy side. Very similar area. I got in on the buy side. However, let's take a look. There was no shock value in this area, both in pound USD and pound New Zealand. Okay, but earlier we had a strong movement up. So I know that this is support. When prices came back down, they used support again. They blasted up. But this was also my resistance. Because it kept hitting the market hard. And it came all the way down till here. I'm like, oh man. Whenever prices get up there again, make sure don't buy it anymore. It just crashes back down. But what happened when it got here the next time? He didn't crash back down. Where is that panic? Interesting. He came there again. He didn't crash back down. Where is that panic? This got me interested in saying, if I can get price low enough, I want to hit the buys. Okay? At that moment, I was looking at pound New Zealand because of correlation. Everything in correlation on the FX meter was telling me, if you want to pick a pair that you want to go with that has a lot of power in it. So I chose pound New Zealand at that moment. Where is it? There we go. Pound New Zealand at that moment. And I used that same timing of the shock value to say, give me a price low enough and I will buy it. Okay, so this is a little technique for you. As long as you have a little bit of correlation in the back of your mind of like, who's strong today, who is weak today, you have that running for you. Then you're looking for your support and resistance areas of, where is my panic? Okay, so once prices were shooting up here, where'd it go? Sorry, it's over here. Once prices were shooting up, I wanted to make sure I get out on time also. I don't want to hold on to it forever. So I got out at the price of 60 area. I believe that was 60 area more or less. Shows 64 here, but by the time I hit the close, I got out at 60. Okay. Thank you, Charita, for sharing that link. There you go. There you go. It's on Google Play. Okay. All right. So do you guys understand why and how I use support and resistance knowledge, supporting with all the other knowledge that I have that I teach on Urban Forex? I use all of that together to guide this trade. Okay. If you just use support and resistance, okay, you're not going to be equipped hard enough to come into the market to make tons of money, but it's a very good start. But the main point I wanted to tell all of you guys today is, do not fall into the trap of how exactly should I do something. The moment you get into how exactly should I do something, there is no career for you in Forex. I promise you. I really promise you. And I say this in the most humblest way for your benefit. I promise you, if you look for something that is so exact, it will not work. It will not work. Okay? All right, so we have a lot of courses on Urban Forex that walk you through step by step on how you're supposed to read price action. You notice on my chart also, no indicators. I don't use multiple indicators to guide me on what is the market trying to tell me. I'm thinking constantly of, what is Billy and what is Bob doing now? What is Billy, what is Bob doing now? How can I make use of that? How do I know what the larger player is doing and what is my Billy and Bob doing? And then I have an edge over the market. Not, this is the market, let me paint it with indicators. I will read the indicator and then I will make a decision 3 or 4 steps back. You see how bad that is? How weak that is? Because an indicator, its only job is to follow the market. So how can the indicator give me the answer if it's following the market? I might as well follow the market myself and cut out the middleman. Right? So its only job is to follow the market. If you really want to get your game up, then you need to learn more about the markets. For those of you who do not have any idea about how to use the markets, but you have some knowledge of trends, support and resistance, trend lines, and a little bit like that, then I would recommend you go with the Urban Forex Mastering Price Action course. Below this video, on your right hand side, you'll see the icon for Urbi, and it's our friendly robot, and my team is in there as well. They'll assist you to pick up that course. It is available as a webinar exclusive for less than $200. It is a 7-week long course. I walk you week after week, step by step, and telling you what you need to look out for, how you need to do it, and keep you with an open mind to make sure you're looking at the markets in the right way and you build your career correctly. Because if you're just hopping webinar to webinar looking for the exact how, you'll find yourself in a webinar just like this once again, tomorrow, day after tomorrow, a week down the line, and you don't want to do that. Okay? How many of you guys here are actually Urban Forex students? Okay, or actually have the Mastering Price Action course with you? Okay, and if you can, please share the feedback of, has it helped you to change the way you think? Okay, because the market is bombarded with education that only teaches indicators and all of this weird nonsense that really doesn't move the needle. Even 1 inch, it doesn't move the needle. You'll just constantly hop from one technique to the next, and it will just destroy you. It'll just destroy you, and you don't want to do that. I used to be in that position, and man, I lost so much money. I lost so much money. It took me a long time to find out. To be exact, I've been in this industry for over 13 years, but it's taken me 7 years of blood, sweat, and a lot of debt, even. Account balances in negative, for me to actually come to a conclusion of, wait a minute, I'm doing it all wrong. I'm doing it all wrong. There's a reason why it's called the 95-5. And I didn't know that. And when it clicked, then it all clicked further and further and bigger. And now, you're attending a webinar with one of the biggest webinars we have on the internet when it comes to Forex trading. So you guys have been part of that. So once again, two major newses. Android version is released for FX Meter. You can find that below this video. If you're on YouTube, you can head on over to Urban Forex. But if you're on Urban Forex watching this live webinar, you can refresh the page. It is just below the video. The buttons will be there. Okay, and for those of you who do not have the Mastering Price Action course, you have the course available at a 20% discount. You are able to pick it up today as a webinar exclusive and get get your 7-week course for you, where I walk you step by step. You have access to my team as well. The course does not expire. It is not a residual thing. It's a one-time payment only, and it comes with a money-back guarantee. So you have nothing to lose, and use everything that you've learned so far in this webinar to take you a step further. As always, guys, thank you all for coming in. We do this webinar once every 2 weeks. I look forward to seeing you guys again in 2 weeks' time. We're going to go deeper into more topics. We're going to start you from the basics and take you all the way to the top. Okay? More and more things, more and more times I'm noticing your basics are all flawed. So we're going to come back and rebuild the basics for all of you guys from the ground up. Okay? We're going to rebuild the basics better and better and better. Okay? I'll see you guys soon. I'll see you in 2 weeks, guys. Cheers. Bye for now.